Good morning and welcome to my stock market report. Well, the profit reporting season is upon us, and as I said last week, the issue of company profits, whether they're good or bad, above or below expectations, will determine the direction of the share market in the next month or so, more so than the election, I might say. Now, firstly, in the past couple of days, we've seen on the face of it what seems to be some very good profits from the banking sector. National Australia Bank made $1.1 billion in the quarter to the end of June, and Commonwealth Bank, appeared to surprise people today. It certainly surprised the various talkback commentators by reporting full-year earnings of a whopping $6.1 billion on a cash basis. However, the share prices of both the major banks, and indeed ANZ and Westpac, have fallen since these announcements. What's happening is that bad and doubtful debts are falling compared to last year, which is good, but core earnings aren't really growing all that much, 4, 5, 6%, which is below what the market thought. And of course, over in America, we know that the economy is still struggling. In fact, last night, the US Fed essentially acknowledged that it was going to go back to printing money on behalf of the US government to fund ongoing expenditure and try and lift the economy. Now, printing money is rarely a good idea. We've seen it many times in the past, some of the bad things that can eventuate from it, and this did send the American share market down. Retail stocks also could come under pressure. Now, Kathmandu missed its prospectus forecast, and its shares got absolutely smashed down from around about $1.70 down to the low $1.30s. David Jones, of course, has been in the news recently for all the wrong reasons. We are yet to know how its profit will look. And of course, Myer is another company that has disappointed investors since it relisted last year. On the other hand, Rio Tinto came out with a very good profit report. It seems that the price of coal and iron ore is still very strong thanks to a booming Chinese economy. Its shares have risen since that. And of course, we're yet to hear from BHP, but given that BHP largely digs up and sells the same stuff as Rio, well, one could expect that BHP's profit will be similarly good. And finally, Computershare this morning showed the perils of missing forecasts. Its earnings for the year are up 15%. That, on the face of it, is quite good. But it said for the year ahead, it expects its earnings to fall 10%, and the stock got absolutely smashed, down 12%. So, volatile times set to continue.